Hey, just wanted to jump on for a quick revelation now that we have our bounce for Bitcoin off the 82 level. Um, a lot of talk online about the launch now of the banana zone. So the idea here is that we're going to rocket up to 250,000, 400,000, and that the bottom is in. That could very well be the case, but we also want to take a look at what the charts are telling us. Not just have wishful thinking, but see what's actually going on. So as we take a look here at Bitcoin, we have here our bounce off the 82 level that we were expecting. So right here, we get the close with the wick off the bounce, and we're moving up to the next level here, which is around 87.7, 88. So this would be the level in order to take profits on this move. We do trade 50x leverage. That's my preference. And so that sort of move would be yielding something in the range of, let's see here, yeah, 385% move on 50x leverage is pretty good. So here I'd be actually looking for a short, right? So we have to follow the rules. The rules that I follow here is that if we reach the weekly VWAP or any of these VWAPs from the underside, and we close that way, then the idea is that we short from there, aiming for the next level. The next weekly level currently is at the 74 level down over here, and that will change depending on how the different weeks line up. Now, I just wanted to make the point here. The reason I'm going to jump on is that you sort of want to avoid going all in at the moment. I know for some people, they feel like, well, I always feel hesitant because if you tell someone, well, don't go all in, don't go big, and then you get this big move, they think to themselves that they missed out on the thing. But the idea is the risk management. What happens if you lose all that and you have to work up from zero or from some low amount back up to where you were? That's the painful part. So I just wanted to show historically what we've seen here for bounces like this. So we've this 74 level is really the level I've been waiting for to see for it to be cleared for us to actually make that move up. I know some people were talking about this 62 level down here, which could always be the case, but what happens is that our yearly moving average, our yearly moving average here crossed this level, so it basically makes it less likely that we actually get down to that price, because this yearly average that we follow for Bitcoin generally is not broken for an uptrend. So you see here we get close to it. Here we are over it for this entire period. We cross over here, which is the confirmation for the bull trend, or one of the confirmations for the bull trend. And then we're below it when we went for when we're in our bear market, above it for bull market, and so on and so forth. And if you go back, you'll see that so that level has been respected constantly as we move between bulls and bear markets. This sort of like volume weighted yearly average. So that's why 62 was never really within my expectation. In fact, if we ever got down there, I would expect a bounce back up to underneath the yearly average, and then looking for a short. So that almost would be a sign that the bull market was over for me. All right, so we head back over here. So the question is, these now, after our if we get there, I don't know if we're there yet, if we get to 87.7, then that means the two other levels, the two nearest levels for the bull and bearish case would be up here at around 96.6, and then down here again at the 74. So these would be the two levels for now until the new ones get to develop over the next days, weeks, that the price is being called to. And so the question is, can we, I'm expecting a short, I'm playing for a short here down to 74. But the price can actually get all the way up to 96.6 and still get to 74. So you might be, asking yourself, how can that be? But we've seen that before, right? So we see that over here, where in this consolidation range, we get down. We didn't actually clear, right? Just like over here where we near missed it. We don't actually clear it. And then we get a bounce up. It clears the VWAP level here, and once they're all cleared, now we can move down, wick, get that, and then this would actually be the bottom, right? And it's from here that we actually work our way up. So the same thing could happen over here, that we get all the way up to 87.96.6, roll over, wick down, and that would actually be the way up. We've seen that also over here. So for example, we have this move upwards. It clears the volume weighted average price from a previous level, and then comes down towards the missed level down here. It doesn't exactly touch it, but you'll see here that because the moving average passed it, right? These waves, our wave indicator, end up being like the support. Basically, the volume weighted average price, you want like this convergence between those two levels if they're nearby. And here was the bounce up, totally understandable. So even though we didn't clear that, we move up, and then later on, our waves went above this level. More of our waves went above this level, which makes it very unlikely that we ever get back to it. We see it over here. The price moved up to catch the volume weighted average price, and then moved back down to catch where it missed over here before moving up. And it just happens again and again. Like, we would always go back and see it happen again and again. So that could absolutely occur. So I'm not really looking for a banana zone bull move blast up, even though it could happen. I'm not looking for that until we close and confirm this level here at 87.7, and again we confirm it here at 96.6. There's no need to front run the price actions, and if it blasts up, we're going to have another opportunity to come in. Right, you have your long bags for that. You have your long bags to buy the dips and hold it. If you're trading 50x leverage, you can't just be crazy like that and just hope that the move goes into your favor. So I just wanted to point that out. Also, this would coincide with, if we take a look at our M2 global liquidity tracker, there's much debate online here as to whether or not the offset is for global liquidity, which now everyone's following, is 107 days, 50 days, 70 days, whatever it is, concurrent. I take the 78-day view. And so for me, I'm looking for April 7th. April 7th to me is the day of the blast off. Well, the low would be April 2nd, but April 7th, I'm looking for a big long candle that confirms that we're blasting off. But you'll notice here that before that point, we actually have this dip coming up. This is lower than the low that we had recently over here. And then we had this rise up. So for me, this rise up over here that we're seeing, let me show you here. This bump that we're seeing is right on schedule. Just right on schedule. I was actually looking for this rise up. Had I known today was Fed day, I would have paid more attention to it, but there you go. So I totally expect that. We are headed into a resistance area with our waves, and then which coincides exactly with 87.7, and so I fully expect that we short from over there all the way down to 74. That coincides with this low over here, and then we move up. So that's my countdown clock. That's what I'm expecting, and let's enjoy this ride together. All right, probably be back a couple of times over the next week or so as we count down to liftoff. Thanks for watching this revelation. See ya.